Coming up on Market to Market. Supplies of wheat, corn, and soybeans decline, but the market takes it in stride. Partisan bickering on Capitol Hill results in the first government shutdown in 17 years. And federal agencies close, services are cut, and the impact is felt from sea to shining sea. Those stories and market analysis with Tomm Pfitzenmaier. Next.
This is the Friday, October 4 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. After weeks of congressional name-calling, finger-pointing, and relentless bickering, lawmakers failed to agree on a continuing resolution funding the federal government by the September 30 deadline. House Republicans have approved spending bills that maintain current spending levels, but do not provide funding for the Obama administration's signature legislative achievement, the Affordable Care Act. The measure was designed to help nearly 30 million uninsured Americans get coverage. It also prohibits insurance companies from denying coverage due to pre-existing conditions and imposes other reforms. House Republicans, especially fiscally conservative members of the Tea Party, adamantly oppose what they refer to as Obamacare and have worked to repeal, defund, or weaken the legislation ever since it was signed into law in March of 2010. Senate Democrats, on the other hand, insist that the Affordable Care Act be fully funded, and they refuse to negotiate concessions in reforms signed into law 3 years ago. Ultimately, both parties dug in their heels, and on Tuesday, for the first time in 17 years, the federal government shut down. Congressional leaders of both sides of the aisle blamed each other for the impasse that has shuttered numerous government agencies, curtailed delivery of some popular government services, and furloughed hundreds of thousands of government workers.
Speaker Boehner and his band of Tea Party radicals have done the unthinkable. They've shut down the federal government. Now, for us, that's hard to comprehend as being good. For them, they like it.
My goodness, they won't even sit down and have a discussion about this.
While fiscal restraint, or lack thereof, typically has been the issue in most, if not all, of the 17 previous shutdowns, Democrats say Republicans are working a political agenda.
Republicans in the House of Representatives refuse to fund the government unless we defunded or dismantled the Affordable Care Act. They've shut down the government over an ideological crusade to deny affordable health insurance to millions of Americans. In other words, they demanded ransom just for doing their job.
In the hours leading up to the shutdown and immediately after it went into effect, House Republicans approved several spending resolutions that would have kept some parts of the government open. But Senate Democrats rejected all of the proposals because they included provisions they say would either delay implementation or weaken key provisions of the Affordable Care Act. Some economists believe the shutdown will have a minimal effect on the economy. But for the 800,000 federal employees who were furloughed Tuesday, the lack of a paycheck is making an immediate impact.
Yeah, I'm going to start digging into my savings as, the paychecks stop coming. I'm going to have to dig into my savings to pay my mortgage, pay my bills. My daughter's in college. We have expenses to cover for her.
On Wall Street, the initial fallout was minimal. In fact, the Dow actually posted a modest rally Tuesday on the first day of the shutdown. But later in the week, the lack of a speedy resolution to the debacle had taken its toll, and the Dow and S&P 500 both posted their 9th decline Thursday in the past 11 sessions.
I have to come in and shut myself down and then go home again, and I don't know how long I'll be not working.
The Labor Department's monthly employment report, a key barometer of economic vitality that often proves to be a market maker, became a casualty of the shutdown Friday. And like most of the employees at the IRS, the EPA, the Department of Education, Treasury, and the Interior, Labor Department employees were deemed non-essential and found themselves joining the ranks of the unemployed.
Part of it is I'm not going to be going to McDonald's and spending $1. I'm not going to be going to Home Depot and spending money on home renovation projects. So for every dollar I don't spend at a business, that business is not making money to pay its employees.
Despite the shutdown, more than 60% of government employees are still on the job. And while Uncle Sam sent about 40% of the federal workforce home without pay, members of Congress and President Obama all will receive paychecks during the shutdown. The House is expected to vote on a bill over the weekend authorizing back pay for furloughed workers. Some top Democrats support the idea, but so far, Democrats have refused to negotiate on separate bills, keeping certain politically sensitive parts of the government open. Democrats stepped up the rhetoric Friday, calling on House leaders to rein in Tea Party members and reopen the government with no strings attached. House Speaker John Boehner reacted angrily to a Wall Street Journal story alleging Republicans don't care how long the shutdown lasts because they think they're winning, telling reporters, quote, "This isn't some damn game." And Washington went from shutdown to lockdown Thursday after after a woman led police on a chase that ended at the Capitol, where she was shot and killed. The woman, who had a small child with her in the vehicle, is believed to have been suffering from depression, and it is unclear what role the government shutdown played, if any, in the incident. But one thing is certain: the shutdown is having some very real consequences for millions of Americans. Just as flu season gets underway, officials at the Centers for Disease Control and Prevention claim their efforts to prevent disease outbreaks are severely limited due to the shutdown. The Food and Drug Administration has suspended most routine safety inspections, but USDA meat inspectors have been spared. The Federal Housing Authority is unable to process any new home loans, and nearly 9 million impoverished Americans face dire consequences as funding for the Women, Infants, and Children program, known as WIC, has come to a halt. The U.S. Postal Service will continue deliveries, though postal officials warn that no more than 5 days' worth of cash will be available by mid-October. Medicare and Social Security payments will continue, though new disability applications are unable to be processed. Visitors to America's national parks, monuments, and memorials were among the first taxpayers to feel the impact of the shutdown. All 401 National Park Service sites were closed early Tuesday morning, turning away an estimated 715,000 guests per day.
At this point, we don't know how long this is going to go on for.
In Yellowstone and Yosemite, where visitors often plan their stays months and even years in advance, campers were given 48 hours to vacate the premises.
2 weeks down the drain. Going to Utah, Colorado National Park, Rocky Mountain National Park, Mesa Verde National Park, Arches National Park, Canyonlands National Park, Yosemite National Park, Redwoods National Park, Crater Lake National Park, all shut down.
The Smithsonian's 19 museums and galleries and the National Zoo were shuttered. Visitors to Ellis Island and the Statue of Liberty also were turned away.
Thank you for your service, sir.
Thank you.
But it's doubtful any image of the shutdown is a more poignant metaphor than that of aging military veterans being denied access to memorials erected in their honor in Washington.
I think it's wonderful. I've never been here before. I'm certainly glad that I made the trip.
Even with the government closings?
That's a disappointment.
More than 125 World War II and Korean War vets from Mississippi and Iowa were initially prohibited from entering their memorial Tuesday. But the greatest generation was not to be denied. And some of the same soldiers who stormed the beaches of Normandy entered the hallowed shrine despite its closure. A few members of Congress, including House Republicans, who polls suggest most Americans blame for the shutdown, helped push aside barriers and escorted veterans into the memorial. The National Park Service has received proposals from states, municipalities, and businesses to provide support to reopen parks, but so far the agency has declined all such offers. The Park Service, of course, is precluded legally from accepting private offers to conduct its day-to-day operations. But gridlock in Washington apparently won't stop the Army, Navy, or the Air Force from playing their football games Saturday. On Tuesday, the Department of Defense suspended all intercollegiate athletic events at its service academies because of the shutdown. One day later, however, the DoD approved its service academies playing football on Saturday. According to officials, all costs associated with the Air Force at Navy game and the Army at Boston College contest will be covered by non-appropriated funds. While shutdown casualties garner the most attention, there were other developments this week with ramifications for commodity markets. The Agriculture Department is currently closed for business, but prior to the shutdown, USDA bean counters released their latest quarterly stocks report. Since current stockpiles reflect the 2012 harvest, it's no surprise quarterly grain stocks were actually higher at this time last year. According to USDA, stockpiles of all major grains were nearly 20% lower than in September of 2012. Old crop corn stocks are pegged at 824 million bushels, down 17% from last year, and nearly 1/3 of the coarse grain is being held in on-farm storage. Private estimates put the figure 20% lower than USDA estimates. Disappearance for the third quarter was nearly 2 billion bushels, down 10% from last season. Old crop soybean stocks fell to 141 million bushels, down 17% from last year. Nearly 30% of the oilseeds are stored on farms across the country. Private estimates had guessed the official figure would be 14% lower. Soybean use between June and August totaled 294 million bushels, down 41% from the same period a year ago. Wheat stocks are estimated at 1.85 billion bushels, which is 12% lower than 2012. Nearly 30% of the small grain is believed to be in on-farm storage. Private calculations were slightly more bearish, with the average prediction 3% under the official number. Usage is up 10% from last year at 991 million bushels. While the news was potentially bullish, the market appeared to be unimpressed. December corn fell 5 cents, November soybeans were off nearly a quarter, and the nearby wheat contract lost 16 cents.
Next, the market-to-market report.
By week's end, wheat had recovered all of Monday's loss and then some, while corn continued to struggle. For the week, December wheat gained 4 cents, while the nearby corn contract moved 11 cents lower. Soybeans tumbled on Monday's quarterly stocks report and settled Friday with a weekly loss of 25 cents. Nearby meal prices, however, eked out a gain of 10 cents per ton. In the softs, cotton continued its recent rally as the December contract added 55 cents per hundredweight. In the dairy market, October Class 3 milk gained 19 cents, while the November contract moved 22 cents higher. Over in livestock, December cattle gained 35 cents, nearby feeders advanced by more than $1, and the December lean hog contract posted a weekly loss of 50 cents. In the financials, the euro gained 37 basis points against the dollar. Crude oil rallied nearly $1 on news of progress on the southern portion of the Keystone Pipeline and the looming threat of Tropical Storm Karen. COMEX gold lost $21.60 per ounce, and the Goldman Sachs Commodity Index gained nearly 3 points to settle at 638 even. Here now to lend us his insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
The topic all over the news, the topic at the top of our show, the government shutdown. What effect is that having, if any, on the commodity markets?
Well, it's having an effect on the trade and having an effect on information because the USDA reports aren't coming out. I can't really say that it's having any direct effect on any particular markets, although I guess it is the hog and pig report that we had a few days ago came out and said that hog numbers were a little greater than we thought. So everybody's trying to figure out, does that mean the hogs were pushed back or that the hogs aren't there? Well, the only way to answer that is the daily slaughter reports, which we aren't getting. So in that respect, it's probably having some effect because it's throwing some uncertainty into that market in particular. The other ones, I think, everybody's just going to kind of react to private forecasts and carry on. I think there's a good chance that October report, unless something gets resolved this weekend, probably is going to get pushed back. The October supply-demand report, sorry. Uncertainty is never good in the market. It tends to make things go lower.
Certainly. And uncertainty, the fear could be that money's just going to pull out and sit on the sidelines until we get some reports back.
Yeah, there could be some of that too, certainly.
All right. Well, let's take a look at where we're at today without the government in place. As we look at wheat, we're up 4 cents even after Monday's sell-off. What's driving that wheat higher?
There's pretty good demand for quality wheat. Number one. Number two, the Black Sea area is having a little trouble getting their winter wheat planted. So I think the combination of those two things has been pretty supportive. I don't know that that's got a lot of carry through. I still believe you get up around $7 in wheat. You've got wheat way above corn, so there's going to be the demand for wheat to feed is going to be practically non-existent. So I think we've stretched that rubber band about as far as we're going to be able to here.
Because that spread did continue to widen all week. And
yeah, it did.
So eventually we will see some pullback.
Yeah.
Advice to producers out there?
Well, I think if you have wheat to sell, I think you use resistance up against that 705, whatever, to start getting some sales made.
Okay. Well, now let's take a look at corn. We had the bearish number come out on the quarterly stocks report. Seemed to take a lot of folks by surprise. 200 million more bushels than the market was anticipating, and corn languished all week. Are we putting in lows this week, do you think?
Absolutely not. This corn market, there's too much corn. I mean, if we have another increase in yields, which we probably are going to have, and we struggle with demand, we could be looking at a 2.2 billion bushel carryout, and you aren't going to have $5 corn with those kind of prices. We've had a nice little rally. The market got oversold. You had a little bounce because of harvest delays possibly over the weekend. But the upside potential here, I think, is very limited, and the downside is still pretty significant. So I don't think any kind of a low got put in this week.
So
the demand for corn, ethanol, is capped probably at 4.9 billion bushels. Feed demand, cattle numbers are down. Hog numbers are up, but not a lot. Obviously, we wouldn't be making new highs in hogs if there are a lot of hogs around. Poultry's up a little bit. And export demand, we're still 30-40 cents above the world price on corn. So how are we going to sell corn and meet the USDA's projections on demand? Now, everybody says, well, yeah, exports are up 30-40%, but the USDA is projecting them to be up 70%. So even that isn't holding up. So no, if you're sitting on corn thinking that your revenue assurance program is going to be your marketing plan, at some point you're going to have to sell some corn and develop a plan on how to do that. And
probably looking at that supply of corn that is going to be coming off these combines, probably better to begin marketing sooner rather than later.
On a downtrend, you're always better. The faster you can sell stuff, the better off you are, and we're definitely in a downtrending market here. Now, there's some strategies you can put together to sort of enhance that. There's a good carrying charge in the market. Probably is going to maybe even be a little more as harvest goes along. You can sell that carrying charge and capture that to pay to hold the grain. There's probably going to be some basis plays because the areas in northern Iowa where all the ethanol plants are isn't going to be where the best corn is. So you're going to have some deficits that give some opportunities there. So there are things to do, but the one thing I would point out is everybody you talk to says, I'm going to store my corn and take advantage of the carry. Great. Wonderful strategy. The problem is, to do that, you have to sell the carry. Just sitting here, hoping, thinking that the carry is going to be there, that's not the way it works. The way it works is each successive month tends to come down to where the previous one went up. So if you want to sell the carry, you have to actually sell the carry. So one of the things I think people really need to pay a lot of attention to here.
All right. So that's good advice. And I think that's important for people to remember that as we're putting corn in the bins, trying to capture that carry.
Yeah, don't put it in the bin and just forget about it and hope things are going to get better because they did the last couple of years, because a 2.0 plus billion carryout isn't really something that makes corn go up a lot.
2+ billion, does that put us in the $3 range?
It certainly puts us in the $4 range.
Okay.
Or possibly slip under sub 4.
All right.
And then the other thing is looking at next year. We're going to go in and have an end carry in of $2 billion. Now everybody says, well, the corn-bean ratio favors beans. No, it doesn't. If you compare the 2014 November beans to December 2014 corn, it doesn't favor beans. It favors corn again. So something's going to happen. Either beans are going to have to rally a lot, or you need to be selling the daylights out of December 2014 corn here up against $5.
Well, and speaking of that, we're not seeing beans rally at all. We're continuing to see a slide. What's driving us in beans?
I think to some extent you've got a situation where the funds have been heavily long beans, and all of a sudden you're starting to get bean yield reports drifting in that maybe the beans weren't quite as bad. Now I'm not sure as we get into later beans if that's actually going to be the case, but I think that's what's pressured you. the whole strategy for a lot of people has been to sell beans, store corn. So as they come off the combine, beans are being sold, so that's pressuring it some. You have the prospects of the South American crop being planted, and planting is beginning, and they're starting to think about it, and their conditions are fairly good. So all that, I think, is coming together now. Beans, in my mind, have more upside potential than corn does, just because it's quite a bit tighter carry out.
And looking at the world demand just seems so much greater for beans, particularly
the world demand
American.
is good, and China is sort of always sitting out there as a potential price supportive factor. And if anything goes wrong in South America, that's going to be price supportive also. So you've got a little different dynamics in the bean market than you do the corn, in my opinion.
Certainly. Now, one of the topics that's been discussed a lot is whether or not we've just front-loaded all of our export orders, or are we on a new export track where we're going to see exports continue at this current pace all winter?
Well, that's the question. I would say probably not. If you look, one of the reasons why people are selling beans off the combine and not store them is there's a negative carry. And there's a negative carry because there's an expectation that all those South American beans are going to get dumped on the market in February, March, April. And so there's no reason to pump up and have a carrying charge in the bean trade. So I guess that would argue against that as far as I'm concerned.
Okay. All right. Well, now let's take a look at cotton. We have seen cotton come into a recent rally the past couple weeks. Is that going to continue? What are some drivers?
I think it's in a trading range here. The demand's been fairly decent for cotton. We had that little spike up to 93 or whatever it was a month or so ago, but the market quickly fell back down. I think you're really in a trading range in cotton, in the 82 on the bottom side, and you bounce up toward 90, you probably need to be a seller of cotton.
Get in there and make some sales as it gets close to that 90.
Yeah.
All right. Now, as we take a look over at livestock, we've seen cattle hot for the past month, and we've got live cattle 35 cents higher this week. Cash trade seems to be following. Where do you see the cattle market headed?
Well, we've been in an uptrend in live cattle since I think May 5th. So I mean, it's been a really nice, slow, gradually working higher market, driven primarily by numbers and low numbers. Feeder market driven by cheaper corn prices. That's kind of had two things going in its favor. I guess the question is, are we going to be able to absorb and get the consumer to pay up? Are we going to be in a situation where it's like gas, where we kind of got used to, we complain like crazy about $3, it rallies to 4, and all of a sudden 3 looks like a deal? Maybe we're going to run into that same thing. There's a certain base of the population that likes to eat beef, and we'll find out here if they're going to be willing to pay up for it. If they are, then you could see those December cattle work up into that 134, 135 range, up a couple bucks from here. If they can't, we run into big resistance. They all start running out and buying pork and chicken. Then it's going to be a problem.
How's the exports looking on the beef side? We did have trouble earlier with Russia and China and ractopamine. Do we get that squared away in the market?
I think that's getting squared away. I think that's one of the sources of positive on demand. I think you continue to see that help sort of give underlying support to the market.
Okay. All right. So we're just looking at continued consumer demand. We're going to need the economy to continue to stay strong to keep those people buying. And now, where have we seen box beef values going? Have they been staying relatively elevated?
Yeah, they have been, and they've been well supported. That's why I'm saying I'm wondering if the consumer isn't maybe getting adjusted to some of these prices and willing to accept them and help keep that supported here. I guess I'm fairly optimistic, although, like I said, we've already had a pretty good run, and a lot of this has been anticipated by the market, so the upside isn't great, but I don't know that you want to rush out and make hedges until we get that $1 or $2 rally from here.
Okay. All right. We're possibly getting close to the ceiling on fat cattle.
Yeah.
Now, as we look at feeders, we have seen a tremendous rally, set off a contract high this week, I believe, in November feeders. That's primarily driven by corn?
I don't know. You're kind of forcing me here to put my boots and hat on, and I'm not sure what motivates those guys that are buying those. I know there's a lot of bad corn around, and people are buying cattle to feed out to get rid of that corn, which may turn one bad problem into two if they don't make money on the cattle. But That's one of the things that's been a driver behind that feeder market being strong. I know.
And we've always been worried about that, the crush between the feeder price and the fat price, but now that the fat price is rising, maybe the guys have a little bit more breathing room to chase those feeders a little higher.
And like I said, it's a double one because you got declining corn prices and the perception that that's going to continue, and so they're going to build that into the feeder price too.
And is there decent carry in the cattle market in general?
Not particularly. The deferred months aren't that much higher. I mean, they are up front here, but beyond that, no.
All right.
So there's some incentive to hold cattle in the short run. I don't know that there is farther out.
Looking out 9 months to a year.
Right.
Well, now let's take a look at the hog report. You mentioned the hogs and pigs report that came out last Friday, and was bearish on the market. We did see a little bit of a downturn, down 50 cents. Are we going to hold at this level, do you think, or are we getting started?
See, that's the question that could be answered by these slaughter numbers in that, okay, why are we where we are? Do we have reduced numbers because of the swine virus? Or was that no big deal that's being thrown up? Or were there heat problems that hurt the way the hogs produce this summer? The deferreds are a little higher than the nearbys, so has that incentivized hog producers to hold hogs put a little more weight on, so all of a sudden you have a little hole here and if those hogs start to show up or don't start to show up, kind of answers those questions. So that's why I said early in the show, how this slaughter thing shapes up over the next 3 weeks is probably going to be kind of important.
Yeah. Now, heading into the government shutdown, we were seeing reduced slaughters 10 to 12% below year-ago levels.
Right.
So that's the question.
Is it the disease? Is it the hogs weren't there? Did they not do well? You know, what answers that reduction?
So, producer advice in this time of uncertainty without those reports, how do you handle it?
Well, we've had pretty good prices in pork. I think you get December hogs up in that 89, 90 to 90 cent area. I think you'd have to be a seller of hogs too. I mean, that's a pretty fancy price for hogs. If we do start to see those numbers show up, that market could top out at any moment here. So
okay. Top out?
I'd want to have some, you know, if you think what I say is completely full of baloney, then buy yourself a put and leave your upside open a little bit.
Wonderful. Thank you so much, Tom.
Thanks,
Appreciate you being with us. That wraps up this edition of Market to Market. But Tom and I will continue our discussion and answer some of your questions in our Market Plus segment on our website. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed and Facebook account exclusively at the Market to Market website. Be sure to join us again next week when we'll examine the market impact of a highly anticipated supply and demand report, if the stalemate in Washington is resolved and USDA releases it. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.